Hey folks, Dan Frio here, the Mortgage Update. Today is September 21st, 2020. So I'm going to revamp the channel a little bit, and hopefully it's good news for you guys. I'm getting a lot of comments. They're like, Dan, you call yourself the rate update, but you don't give us specific rates. Well, if you follow my channel, it's kind of hard to do because there's so many variations in regards to mortgage rates. It's dependent on your credit score. I mean, the score could be a 740, a 680, 640, 690, 720. All those have different rates. It could be you're buying your house with 3% down, 5% down, 10%, 20, 30, 50% down. All of them have different rates. And these are what people just don't understand. That's why I try to do the channel. But what I'm going to do today is I'm taking your advice and I'm going to post rates. And I'm going to cover as many as I can. But again, there's variations. So if I go over a rate with you, please remember it's kind of a generic. So I'm not misleading you. I'm trying to give you as much information as I can. Also, it's not only just about rate. Check the fees. Okay, so that's what I want to go over today. So let's go briefly in what's going on with the market right now. And then I'm going to go over and show you where rates were today. And we'll start blending this on a day-to-day basis. So then I can start showing you, okay, the MBSs were up today and here's what today's rates are. And you can see the correlation between the two. I'll give you some economic calendar events that's going on. And then what my prediction is for the week, the month, and the year and all that other stuff. So let's get to it. So where are we right now? Well, the MBSs, or mortgage-backed securities, that's what we follow here on the channel, and I'll explain why, is we follow this number right here. This is the biggest factor when it comes down to what's happening with mortgage rates. So what this number is actually what is happening to mortgage-backed securities, the price of the bonds that are tied to or determine mortgage rates, okay? So there's an inverse relationship in regards to the price and yields or mortgage rates, okay? So as this number goes up, you're gonna always see me say this: prices go up, that's good, because it's driving down yields. So green is good, red is bad. Red means that prices went down, meaning rates are going up. So that's what's going on there. So let's get back to it. Sorry, I got to figure out, I blew up my calendar, I zoomed in, put it that way. So this is what's going on with the MBSs today. And we saw a +9. So we got right back up to where we were in this level right here. So let me go through these real quick with you, and I'm not going to inundate you with all these numbers because it doesn't vary. These numbers back here, these are the past. It will be a signal what's going on in the future. So we pretty much are staying stable right through here. You can see that. Love it. Love it. Stability is good. And I explained the other day, the stability, what's good about the stability is if we have to lock you, or if there's a lot of uncertainty in the market and we like where rates are, and I really don't know what tomorrow's going to bring, I might lock you in on a 60-day lock, because it's taken us about 60 days to lock in rates right now, and to do loans right now. People might say, that's crazy, that's too long. Well, when you have basically almost the best rates, or in many cases the best rates in the market, would you rather wait another 30 or 45 days to get that for your, the next 10, 20, 30 years? Or do you want to just jump in and pay an extra $2-3 grand, get another higher quarter in rate just because you want to close in the next 15 days versus 45 days? So please look long term. I know we have some frustrated clients because it's taking a little bit longer, but we're doing our complete best that we can to get you closed as fast as we can. But I promise you're not losing out on your rate, because if we have to extend that rate that we locked, I'm eating that charge for you. I'm not passing on those costs to you. So don't worry about that part of it. But what happens is you lock a loan in. Basically, lock means we got it. You're locked in. We can't change it at that point. But if there's a lot of uncertainty in the market, we might like the rate where it is. So we lock you in on, let's say, a 60-day rate. And we have to close your loan within 60 days, all right? So what happens, though, is if the rates aren't really moving at all, I can condense you down to maybe a 45-day or a 30-day, maybe even a 15-day. If we can get you a 15-day lock versus a 60-day lock, I might be able to get you maybe 0.1 or 0.2 better in rate. So that's why we monitor what's going on over the term of things. So right now there's stability in the market. I'm not locking in anybody. So if you get your paperwork from us and it says float, don't worry. That basically means I'm monitoring the market for you. I can pretty much guarantee you that I'll get you the rate I quoted you or better. Okay, so don't worry about that part of things. So this is what's going on with things right now. The Federal Reserve is doing a fantastic job of buying mortgage-backed securities, stabilizing the market. Okay, another piece of things is when the stock market is doing bad, usually this does better. And we had not a collapse, but we had a $500 or 500 point drop in the Dow today. So let's go over to what happened in basically in the markets today. We saw the stock market, the Dow, down 509 points today, and mortgage-backed securities went up, which is fantastic. There was really no economic news today. So let's get on to the economic news that's coming out for the week. Tomorrow we see existing home sales. That's not going to really change anything. Manufacturing indexes, I don't see any surprises through any of this stuff right here. Federal Chairman Powell, who is that person? Well, that's the guy who runs the Fed. And he comes out and he's talking to this week. And that can have some effect on the markets. And it usually does depend. And the tough thing about him is like Trump. They hang on every word, not every sentence, every word that he says. So he's very careful and meticulous on what he says or doesn't say. And then at the end of the week, we start seeing jobless claims and continued jobless claims. Don't see anything really there that should affect the markets, as well as durable goods orders. So this week, I really don't see anything that should affect the market in a positive or a negative way. Okay, so it should be a stagnant week. The tough thing is there's a Supreme Court justice who passed away last week, and that is going to be a long-term effect on the markets. She leaned left, and Trump leans right. So if Trump gets reelected, he will bring in a right person. I don't mean right or wrong. I'm just saying a person to the right. And if Biden comes in, he'll bring in a justice who leans to the left. And there is a lot of power in the Supreme Court. I'm going to leave it at that because I don't want to talk religion and politics on this channel. The next thing is we go to what happened in the markets today, and basically nothing. The Dow was down, and I'll look into it a little bit further on what happened, why we were down 500. I think there's just a lot of volatility, a lot of uncertainty in the markets, especially with the passing away of one of the Supreme Justices. That also is going to throw a little bit of turmoil in those markets. But again, as things are uncertain and unpredictable and scary out in the world, the more scary, the more uncertain things are, the better it is for bonds and the better it is for mortgage-backed securities. When I say better, it means the prices go up and yields come down. Okay, so that's what we're seeing there. CNBC, I usually jump in here just to see if there's anything really out of the ordinary that stands out. The only thing I can see here is that they're saying home equity climbs amid coronavirus pandemic. What a lot of people are doing is paying off a lot of bills or a lot of credit cards that they used during the pandemic. They finally realized, you know what, I need a little cushion in the bank. So they're at 4.5% rate. They can get 2.9% and pull out some cash to put it as a reserve, and they're doing so. Refinance your mortgage will cost you more thanks to an adverse market fee. I'm actually going to be highlighted in MSN and Yahoo Finance in about a week, and I'll post that comment here. I had them reach out to me, one of the writers reach out to me explaining what this fee is that's going to be implemented on December 1st. It is going to cost you 0.5 point, no matter who you use as a lender. It's going to cost you more to refinance starting October 1st. So please jump in, and if you're on the fence, what do I want to do? Do I want to refinance or not or whatever? Do so. And also watch my video that I did just the other day, last week, and I explained a lot of these costs and what they are or how they are going to be implemented. And I'll go into a little more detail on MSN and Yahoo Finance. And when that article gets posted, I will make sure I post that on here and give you a link to where to go to view that. Okay, so now I'm not going to go over this today because I want to go over a new format that I want to do. And I'm going to try to post this. I'm going to try to edit it into the video going forward. Today I got a little late jump start on doing things. But let me go over what I'm looking at in regards to how I want to show you guys where rates are today. So let's get on to my new form. And let's go to, I hope you guys can see that, and I'll try to zoom in on it to make it a little easier for you to read. So I wanted to start posting where rates are today, okay? So how I broke it down is I went with conventional financing, FHA, and VA, and you can see that throughout here. All right, so right now, if you're looking to buy, a lot of people or most people want to put down the minimum percentage down. And that is you need at least 3% of a down payment when you're buying a home and you want conventional financing. All right. So if you're looking to buy a house with 3% down right now with a 740 credit score, you can qualify with a 2.875 rate, APR 2.952. Now, all these are using these as concrete numbers, or these as the factors involved. The loan amount in every one of these situations is going to be $250,000. I adjusted the purchase price or the home value according to the loan to value that I'm going to explain. What loan to value is it's the loan divided by the value. Okay? So for example, make it simple. A loan to value on a property that you're looking for a $100,000 loan on a $200,000 property, that's $100,000 divided by $200,000, which is 50%. So if you have a $200,000 loan on a $200,000 property, that's 200 divided by 200 is 100%. So hopefully that makes sense to you. So going forward, I look at if you want to refinance, just refinance, we call that a rate and term. So all you're looking to do is refinance the rate to a lower rate or a different term. But on the 30-year fixed rate, on rate and term at 75%, that loan to value factor, your rate is 3%, APR 3.078. The same, you have the same rate on that same scenario if you're looking to pull out cash as well. That's a fantastic deal right there. Now we go to government loans. Those are FHA and VA. Right now, if you're looking to buy a home, FHA only requires 3.5% down. So if you're looking to buy a $100,000 house, 3.5% of that is $3,500. So at 96.5% loan to value, meaning you put down 3.5%, the rate today is 2.75. The APR is 3.18. And that rate is the same if you're looking to do the FHA streamline. So if you currently have an FHA loan and you want to refinance, let's say a lot of people are still out there at like 4%, and we're getting them, like, let's say in this case, you have an FHA loan and you want to refinance. It's really simple. As long as you made the last 12 payments on time, you should qualify. You need a 620 credit score or higher. We can get you a 2.75 rate with an APR of 3.18. And our VA rates are the same as our FHA rates right now. It's not always the same, but normally it is. If you're looking to buy a home VA, you don't need any down payment. You can finance 100% of it. So you can do a 100% purchase, and you're looking at a rate of 2.75, APR of 3.18. Same thing with a VA. You can actually do a VA consolidation loan. You can pull out cash up to a 100% of the loan's value. And on that, again, the rate is 2.75 and the APR is 3.18. So those are my rates today. So what I'm going to do going forward is I'm going to do a couple things. Let me get you back to me, and I apologize if you're going to be blown up. I just lost my cursor. Let me condense this down a little bit. And there is me. So let me center myself. This is how I'm going to try to start doing my format. So then we have a benchmark. We know where rates are today, And then what I'm going to show you is what happened with the mortgage-backed securities markets, so the bond market that would affect rates for the day. And then I'll repost rates every day. During my video, I'll tell you where rates are. Tuesdays is a special day. I compare my rates for a particular program against 5, 6, 7 other companies that I can find online. It's usually U.S. Bank, Bank of America, Wells Fargo, Chase, Guaranteed Rate, Rocket Mortgage, as many as I can find. If you can find a website that actually is posting rates, so let's say, for example, you can put in your criteria and it is giving you a rate, please put that in the description down below so then I can share it with everybody else and I can run my mortgage calculator through and compare it to theirs as well. So if you like what you see and you say, Dan, what do I need to do to reach out to you? Well, I'm going to show you how to do that right now. You go to therateupdate.com. So that's therateupdate.com. And all you have to do is scroll down. And some people are saying, Dan, you're starting to ghost me. You're not answering the phone and you're not calling me back. Guys, I'm trying my best. I have 8 loan officers on standby, another 1 or 2 on standby, basically 24 hours a day. The phones are ringing off the hook. So it's not that I'm ghosting you. We're busy. And I'd be more than happy to talk to you. The best way to reach me, if you want to reach me personally, is email me. But if you want to reach somebody, and many times I answer the phone, but if I don't, and you really, really, really want to talk to me, please just ask them to have me call. Or, like I said, email me, and I'm going to give you that in a second. But you can call us at 844-775-LOAN. That's 844-775-5626. I'd love for you to follow us on social media. I post all my videos on here as well as updates and a bunch of other things there. But my name is Dan Frio. It's DANFRIO. If you really want to reach me personally, the best way to do that is email me at dfrio@preferredrate.com. That's the best way to reach me personally. If you'd like to get started on a mortgage, if you're looking to buy, just click right here. If you're looking to refinance, click right here. You can click here. You can click here. We made it so easy that you can basically click anywhere on any page and it'll route you to us and at least get the ball rolling. If you just want to talk and say, I don't really want to go through, 10 minutes of applications. I just want to see what kind of can you do for me. Remember, the more information, it's like a computer. The better the information is, the better the answer. So the more information I can get from you, the better. So what I ask a lot of people to do is this, and it's pretty simple. Get a second opinion. And how does that help you? Well, and how do you do that? Well, if you're in the process of a mortgage right now, you get a loan estimate or a fee worksheet. All I'm asking you to do is email that to me. And the only missing item there is your credit score. And you probably know your credit score. Most people do. If you don't, go to credit scores, it's plural, creditscoresandmore.com. It's creditscoresandmore.com and click step 1. It'll take you 3 minutes. Don't sign up for anything. Don't put your credit card in. Don't upgrade to anything. It'll give you a credit score. Send me that credit score. That's all I'm asking for there. But send me your loan estimate along with that. I'll get back with you. I'll write all over the loan estimate you give me when red penned, and I'll explain to you what I can or can't do. You can etch that in stone. But I need you to respond. So most of the time it'll come back that somebody's getting you a 3.25. I'm doing $299. Their fees are $3,500. I'm $895. And I'll tell you, you know what? Let's get this going. I can do it right now. Just complete the application and I'll get you locked in. That quote is good for that day. Every day things change. So what I ask you to do is don't wait a week and then come back to me and say, Dan, I want that deal. It might change, and I'll have to make changes or updates to it, because as you notice, and why we follow this every day, it changes every day. It's like a stock. So that's it for today, but I hope you like the new format. I hope you like the rates. Let me know if you can see all the numbers, if there's anything else you want me to change or advise you on, but hopefully you get it on this one. So God bless. We might hit it. I need you guys. We're about 100 short of 10,000 subscribers. So please pass it on. Share it to your friends, family, neighbors, anybody you can. See if they'll click us on and subscribe. Please give me a thumbs up. Subscribe down below. Leave some comments. And I'll do my t-shirt drawing tomorrow. I apologize. I had to fly out of town on an emergency. family issues. I had to fly out of town Friday afternoon, and I couldn't do my T-shirt drawing, but I promise you, I'll if I'm not here, I'll start assigning somebody to do that for me. So take care. God bless. I'll see you tomorrow, same time, same place. Take care. Bye-bye.